some of y'all were super salty last year when I recommended Disney in the $77 to $83 range. Wow, what a missed opportunity, up 55% if you weren't paying attention. Let's do an update on this blue chip value stock now that they have their annual shareholder meeting out of the way and the next quarterly earnings is right around the corner. Let's talk some Disney. Now, I know Disney has its share of controversy. I've seen y'all's comments. Y'all are allergic to making money because of your politics or whatever. But when we're looking at blue chip companies that are out of favor, when y'all hate it, I love it. I'm looking for companies that have a long history of growing revenues and growing profits that are temporarily out of favor. And when you hate it, that's when I'm buying. So if y'all are allergic to making money and dropping those comments makes you feel better about it, keep on doing it. We're going to keep on making money over here. Let's talk some Disney now. Now, I know y'all love your speculative trades, your momentum trades, your short squeezes. That's fine, but let's keep those to a small percentage of our overall account so we don't get blown out. I want you guys to be looking for companies that have a long history of increasing revenues and profits for the bulk of your portfolio. And if we pick them carefully, we can even beat the indexes. Let's take a look at the quarterly revenue history for Disney. This is the type of chart that we want to see. And when we look at the net income, same thing, a very long history of increasing net incomes with the last couple years showing a bit of problems. And that's what makes it so interesting. How high could this thing go if they ever fix these problems? But even with the current struggles that they are having, there has been some opportunities to pick up Disney super cheap. As you guys know, Nelson Peltz, the activist investor, had been waging a proxy war with management at Disney. He did not come out on top at the recent annual shareholder meeting. Mr. Peltz and his hedge fund Triam Partners have been accumulating Disney and lobbying the executives for a board seat, lobbying for change. He got in at $87. Wow, we actually beat Triam Partners with our entry on Disney. The article goes on to say that Disney's latest quarterly earnings performance, along with the recent stock gains, probably secured the company's victory against Mr. Peltz, but investor sentiment can shift quickly, particularly if the turnaround begins to stall or its fourth quarter target for profitability in its streaming business starts to look unachievable. The proxy fight may have been bruising, but the media and entertainment giant has an even bigger problem on its hands: the hunt for a successor to Bob Iger. Triam Partners had been trying to get 2 board seats on the Disney board at the annual shareholder meeting just a couple weeks ago. That effort was not successful, shareholders voting them down. And CEO Bob Iger said, with the distracting proxy contest now behind us, we're eager to focus 100% of our attention on our most important priorities: growth and value creation for our shareholders and creative excellence for our customers. Mr. Peltz, on behalf of Triam Partners, said, while we are disappointed with the outcome of this proxy contest, Triam greatly appreciates all of the support and dialogue we have had with Disney stakeholders, and we are proud of the impact we have had on refocusing this company on value creation and good governance. While we are waiting for CEO Iger to finish out his term, Disney is in the process of identifying potential replacement candidates. We have Dana Walden and Alan Bergman, top internal candidates, with other contenders including Josh Denaro, Disney Experiences chairman, and Jimmy Pitaro, ESPN chairman. In other recent Disney news, ESPN streaming service will include sports betting, according to Bob Iger. There'll be plenty of opportunity to bet on sports basically right off the app, he says in an interview on CNBC. He also says that the app will have fantasy sports features and other customer engagement opportunities. Those kind of offerings will differentiate the app from the combined sports streaming offering that Disney is working on with Warner Brothers and Fox. With Disney currently trading around $114, analysts still have it marked as a buy with an average price target of $124, a low of $76, and a high analyst price target of $145. Obviously, the next earnings is going to tell us really which direction Disney stock price is going to go from here. Their upcoming earnings call is going to be on May 7th at 8:30 a.m. Eastern Time, and I will be streaming that live here on the channel. Stick around for that, and we will see where Disney goes from here. If you have any questions or comments, drop them below. I love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.